Let's say we have a borrower that's rate shopping and they're trying to find the best interest rate because they have great credit. So let's say they have an interest rate between 8.40 and 8.50. And they are in the state of Arizona. And the purchase price is $400,000 and the down payment is 5%. If the interest rate is fixed and the loan term is for 30 years and they have a loan type of conventional, let's go ahead and compare the interest rates. So for example, let's say your competitor is offering them a 3.25% interest rate and you're able to get them a 2.875% interest rate. The total interest cost over the first 5 years would be for them $58,593, and if they went ahead and purchased with you, it would be $51,665, which would represent a cost savings in interest of $6,928. If they decided to stay in the home for 30 years, they would pay $215,362 over 30 years, and with you, they would pay $187,573. Now this would be one way of showing the borrower what the savings would be in interest payments over 5 years and 30 years by going with you versus your competitor. You can get them an even lower interest rate if they're able to increase the down payment, or if you wanted to offer the borrower an even lower interest rate, we would click on 15 years and we would keep the competitor's interest rate at around 3.125, and then we'd be able to give the borrower an even lower interest rate, let's say at 2.25, and be able to provide them the interest cost for the first 5 years, which would be, in this case, your competitor's interest payments would be $51,335, and your interest payments would be $36,634. So their cost savings would be $14,702, which represents a lot more savings. And over 15 years, it would be $96,481 with your competitor, and with you it would be $68,078, which would represent a cost savings of $28,403 over 15 years. So in this case, they're going to save a lot more money by going with a 15-year mortgage instead of a 30-year mortgage, but your competitor possibly didn't even offer that possibility or that option, but you did, and you showed them the savings in interest payments, and for that reason they might just go with you instead of your competitor.